Hey, how
Andy, how
are
you
you,
doing?
Brian?
I'm doing
Good,
great. How's
good.
everything been
How
on
are-
your end?
Oh, it's been busy. It's been really busy. It's been yeah, pretty nonstop. Um, okay, so doing a sound check. I can hear you loud and clear.
Yeah, everything is good on my end.
Okay, sounds good. Okay, well, we're gonna kick it off. All right, welcome everyone. Good morning, good afternoon, and good evening, wherever you are in the world. Where I am, today's Thursday, the 14th of July, and I think Brian, you're in the evening of Wednesday, the 13th of July.
Yeah, 6:30
Ni-
p.m. on Wednesday evening over here in California.
Nice, nice. Well done. Okay, so all right. Hope everyone's doing well. Hope everyone's staying safe. We have again our special guest today, Brian from Santaman. Very big, warm, and big and warm welcome to you, Brian.
Great to be here as always. Yeah, it's been a very interesting month or so since we last spoke with some crazy volatility in late June, followed by a rise in July, then a fall this past week. And then finally, it looks like today things are at least showing glimpses of breaking out, and we can find out together whether that might continue.
Yeah, that sounds good. All right, so for those of you who are just joining us, don't forget to like, share, and subscribe. Right, and if you're tuning in on YouTube, just click on the bell icon and choose all, so that you'll always get notified whenever we come online. Don't forget to tag your friends, and throw in any questions. We'll try to get back to you as soon as we can. For those of you who are just tuning in for the first time, my name is Andrew, and I'm from Equities Tracker, and we have Brian, who is from Sentiment. Now, Brian, I'll let you do a quick intro of yourself and Sentiment, and
Sure.
then let's kick it off because I think we've got a pretty exciting topic today.
You bet. Yeah, I'm Brian. I've been with Santiment now for about 3 years. We have really grown as an on-chain and social platform since we first began in 2016, a couple of years before I even arrived. And really, what we're all about is offering the widest amount of on-chain and social data anywhere on the internet. Uh, Over 2,000 assets included, as well as the only site to offer things such as development activity, certain models like MVRV, divergence, daily active addresses, things like that. And we'll try to cover as much as we can in our half an hour here so we can show off exactly what picture the data is showing in terms of where markets may be heading.
Yeah, yeah. Well, let's do it. I personally use Sentiment every day. It's a great, fantastic tool, especially once you've figured out and you've learned the different metrics that the on-chain metrics, that are available. It really does, make it a very transparent market.
Yeah.
So, Brian, let's kick it off. What are we talking about today?
Yeah, why don't I go ahead and share my screen? We'll do a bit of a recap on what's been happening, and then we'll look at things such as whale activity. MVRV is playing an important role right now, a few other things. So let me know that you can see everything I am sharing right now. How's that looking for
Sure.
you?
I think that's about to come on. There we go. Yeah, looking good.
Beautiful. All right, so this is our general data screener. This is where we can see the raw price falls, the amount of social volume change, and then everything sorted by market cap, or you can do other things such as development activity, volume, other things. And um, over the past week, through all of this up and down movement, it's actually just slightly down right now in terms of Bitcoin's price, which is now back over 20K. It spent the last few days, most of the last week actually, under 20K. So it's great to be back above that psychological support. Ethereum has dropped far more at about 6.5%. And you can see through most of these, which, by the way, the boxes are all sized by their proportional amount of market cap compared to Bitcoin here. But you can see most of them are in the red. You've got a few outliers, which we can see down here. Matic has, of course, done quite well. Uniswap, we have here Aave, Quant, I'm getting a weird pop-up, sorry. We have ICP, XCN. I think, yeah, Curve has actually been up over the past week, but the vast majority of assets, not just in the top 100, but any active crypto asset, most have been falling. It seems like about 80% or more of them have. And really, the story is in the social volume, because we've actually seen a huge rise in social volume, which we'll show on our charts in a moment. But Bitcoin's amount of discussions on platforms where we scrape data, such as Telegram, Twitter, Reddit, Discord, and some other pro traders chats, they've almost doubled their amount of discussion this week compared to last week. And Ethereum has two and a half x its previous week of discussion. So there's a ton of spotlight on Ethereum right now. We can maybe briefly look into why. And then you can see stablecoin discussion is starting to die down. That's usually a good thing. It means that there's less worry about stablecoins. Usually the only reason they're talked about a lot is because there might have been a depegging like there was back in May for Tether, where there's just not a lot of trust for those coins where you can park your assets and feel more secure. At least you're supposed to. And that's why stablecoins exist. So you can sort of keep your money on the sidelines if you feel money might be too volatile right now. And then you can see BNB up about 69%, XRP up 50%. Lots more discussion crypto wide right now. And a lot of that may have to do with the CPI that just came out and the upcoming FOMC decision. I'm curious, Andrew, have you guys been looking at the upcoming Fed decision and how that might be affecting the markets?
Yeah, definitely. I mean, the trend that we see on our end is it's well, it's interesting in this in Malaysia right now. On the ground, it doesn't feel like there's going to be an incoming recession or but internally, from what we see based on our research, our analysis, we're bracing for impact, because whatever Jerome Powell does, it's going to, it's not going to just affect America, it's going to affect the whole world, really. And
Totally.
yeah, so looking, like the euro is now on parity with the USD, and it's interesting because if you look at the data, 40% of all bonds are owned by the ECB, the European Central Bank, and which means if they ever do start selling, um, that's just gonna tank the market. So it looks pretty bleak from where we are right now in terms of what's happening at the macro level, because as Jerome keeps increasing the interest rates, it's really wreaking havoc on some of the other central banks who have been less disciplined. So yeah, it's interesting, and there's I just attended a talk last night, and it was interesting because the speaker actually talked about you know talked about gold, right? And I said, well, what about Bitcoin? Because it has a limited supply, and
Sure.
I think in general the general population don't know enough about Bitcoin, or and how that its properties and how they work. I just wish more people would take some time out and get to understand it and figure out what it really is. But yeah, in general, on our end, it's we're bracing for impact, but the general population, because we're quite well insulated, because Malaysia is actually a net gas. Well, we net oil exporter, so we're heavily subsidized in terms of our fuel. So
Hmm.
the general population here isn't feeling. They're feeling it, but it's not that bad. It hasn't been uh, crazy prices yet, because the government heavily subsidizes the oil here.
Right. Yeah, it's It's certainly an interesting time. I mean, the initial reaction to the CPI data, um, the equities actually went down and crypto went up a little bit. You can see here on the latest day, just the last 24 hours, a little tick down here for the S&P, while Bitcoin's
Mhm.
price, as I said, went back above 20K, and so far hasn't stopped. We'll see how things look tomorrow if equities continue to drop, and see if crypto can continue to defy the very close correlation it's had over the past at least 7 or so months here. Meanwhile, gold, it had a little bit of a push up and then fell a little bit at the end of the trading day. That's expected to go up with, inflation being a continued concern. I think they announced it was like a 9.2% growth, which is higher than expectations and supposed to be hawkish and potentially cause the Fed to raise interest rates yet again before the next one in September. So if that happens, that would not be the greatest news for crypto if indeed it continues to stay tied to the S&P 500 here. But for now, we'll wait and see. And like you said, Powell's decisions is going to affect pretty much everything. And sometimes I wonder if
Yeah.
he and the Fed really know how much power they have, not just for the U.S. stock market, but crypto and worldwide markets where you guys are at too.
Yeah, yeah, definitely. It's definitely interesting times right now. But Jerome Powell only has control over monetary policy. I
Yes.
guess the issue is that that the government has control over fiscal policy. So when they kind of both have to work together because he's just trying to plug the hole, or he's trying to slow it down. And here's another interesting fact: if you actually look at the inflation rate, right? Because it's always compared against the same time last year. So every month, obviously, it's gonna keep going up against last year. So yeah, so that's um, just to give context to those who aren't too familiar with it. So yeah, so if you compare it this year against last year, it'll go up. It'll definitely be up every month.
Yeah, it's widely believed on our end that there's a pretty tight correlation with uh, with inflation and where crypto is going next. And I'll show you here uh,
Nice.
in our sand trends page. So if we type in, well, there we go. I don't even have to type it in. The top two trending words right now are inflation and CPI. So that tells you everything you need to know.
Yeah.
Clearly, people are discussing it and are well aware that the decisions coming up, and even the CPI that was released today, are dramatically impacting and will continue to impact things until things in the world begin to normalize. So I can click on inflation right here, and you can see just how massive of a spike we had in discussion today across different crypto platforms. This was the highest spike ever uh, by a large margin. So we can even scroll down and see where the spikes were happening. It looks like Reddit and Twitter, especially, just had
Mm.
massive surges of discussion. So the crowd is definitely aware of this one.
Yeah.
And typically, by the way, the price goes either sideways or down during these spikes. You can see here, Reddit spike correlating with Twitter spike. Price dropped right afterwards. Same thing here. Uh, a lot of talk of inflation. Price started to go down, and then of course people slowly realized that that was the main thing attributing the drop. Um, and really, we want to see that eventually things just fall off a cliff, sort of like what we saw with um, COVID. I can go COVID or COVID-19 or pandemic. So I can combine all of those keywords together. And if I go back all the way to, we'll say 2019, just for now, 3 years back, we can see when all the awareness happened, right? Right as the price dropped. And then slowly, as the concerns about it died down, at least initially back in 2020, that's when prices were going up. And then when there were major concerns, I think this was around the time Omicron came out, then there was the renewed interest and prices were falling once again and began to rise once the concern about COVID began to normalize. So we're sort of seeing the same thing for, Fed, consumer price index, and inflation right now, where the less concern there is, the more prices are able to recover.
Yeah, yeah, yeah. That's quite insightful. That's cool.
Yeah, so we talked a lot about social trends. I want to make sure we go over some of the Bitcoin stuff right now, as well as some of the Ethereum stuff, as I promised. We can maybe even take a quick glimpse at both of their whale behaviors right now and see what's going on there. But this is the circulation happening right now, and this red line shows kind of the 30-day moving average to simplify all this noise. And you can see that the amount of unique tokens that are moving on the BTC network are actually moving up slowly but surely. We could zoom out a little bit to the last year and check it out. Even despite the huge price retracement since the all-time high here, circulation has just inched up more and more. So that's creating a bit of a bullish divergence, especially if we just start here. So draw a line on the 30-day moving trend line for circulation, and then draw a line on price. Yeah, I mean, that's a very good thing, because two of the primary metrics that we've found that can really pump prices are circulation and daily active addresses, because these resemble the actual raw amount of utility going on networks. And circulation is slowly rising, while daily active address is not so much. It's actually moving down as prices have declined. So in other words, what this means is there are less unique amounts of active addresses, or people essentially, that are staying in crypto right now, but the overall amount of unique tokens that are being moved on a daily basis is actually going up. So less people are moving around more tokens, which is quite interesting, and it's a unique pattern that we don't often see. We also have this model. Yeah, go ahead.
How would you interpret that? Would you say that the whales are moving more Bitcoin? Yeah.
Yeah, I would. And I'll show that to you in just a moment. It does appear that the whales, especially since October of last year, have been dumping pretty considerably. And that's had a lot to do with why we're able to see a higher amount of circulation, but lower amount of daily active addresses at the same time. It's because the dormant whales, who were kind of riding up this price all the way since early 2020, they finally said, okay, we're good. And right around here, on this first all-time high, right before the true all-time high in November, they began to shed some of their profit and haven't really began to show significant signs of accumulation yet. And that's what will also be a key cog in Bitcoin's eventual recovery that we think will happen. But I was going to show really briefly on this model here, this is basically calculating the amount of circulation versus the market cap over time, and telling us what divergences are showing without having to draw lines like I just did. And it's based on a 5-color scale, bearish all the way up to bullish here. And intuitively, green and yellow-green mean bullish and semi-bullish respectively. Red and orange mean bearish and semi-bearish respectively. And up until this month, we were seeing actually a nice semi-bullish and even bullish divergence in May and June, because prices were falling so hard compared to the circulation, which was actually fine. And currently, it's looking a little more neutral as of this month, because it's not quite as high as it was in June. But nevertheless, we're not seeing any sort of danger signs like we saw here, which began in March and went all the way until September, until there was a big breakout in October and November, and we had those all-time highs. But you can see pretty clearly just from looking at the red zones, these are the ones we want to avoid, because prices decline pretty swiftly when they go into this range. And then during yellow, green, and green, that's when we see the big climbs happening. So right now, I mean, all things considered, we had been in a pretty solid bullish, semi-bullish pattern. It's calmed down a little bit, but I still like the chances just based on how good things have looked for pretty much the last 9 months, based on the utility not really dropping off.
Yeah. Hey, Brian. So just for the users who are tuning in, how would they get access? How do they get access to that Google Sheets that you've just shown us?
Yeah, good question. So you can go to app.santiment.net/pricing, or just click on this button on our main Santiment page. You can either
Mhm.
buy a membership or you can just start a trial. Many people like to get a trial and make sure they know what they're getting into, and we totally get that. It's very easy to just make an account, provide an active email, and then basically you'll get a API key in your profile that you can plug in by then going to Google Sheets. Anyone can just go to Google Sheets on Google, sign in with the same email that you use to make your Santiment account. You'll make a copy of this link, which I can leave for you at the end of this call.
Cool.
And you'll have basically your own version of this. Then just basically plug in the SandSheets extension, which you can find uh, on the Google Store easily. Download it
Mm-hmm.
free, plug in your API, and you're good. And it'll automatically load all of this, check in on it on a daily basis.
Nice. That would be a very useful tool for the users.
Yeah, for sure. And we've got all sorts of models. MVRV is another one that I can show you really quickly. This basically tells us how overvalued or I should say more overbought or underbought an asset is based on the success of the average trader, because it's a zero-sum game in MVRV land, which essentially is measuring the average realized value per address on the network. So when they're trading in profit, that's recorded. When they're trading at a loss, that's recorded. And all of these assets in yellow green, or especially bright green here, these are the ones showing the most underbought signals right now, such as Celsius and Scale, especially. We've talked about Ren before on our call. It's about neutral at the moment. We don't have Litecoin in the moment, but I could show it really quick on our Sandbase. A few that are actually doing really well and might be a little bit overheated right now would be Curve and Matic, because you can see these bars showing that their average trading returns are super high, meaning low on this chart, and that's why they're in the red. But Bitcoin is slightly underbought right now, so that's a good sign. And Ethereum is also right next to it as semi-underbought, so that's good to see.
Nice.
And as I mentioned, Litecoin. Here we can see it's just about even right now. Not really much of a divergence either way at the moment. I would guess, though, since we're only looking at the 30-day, if we looked at like the 365-day MVRV, right, we'll just put it right next to it. So yeah, that's very low, and so it would definitely be considered underbought right now, because the average trading returns for any active address that's added on or opened up a new Litecoin position in the last year, their average return is about negative 50%. And that means there's some meat on the bone for a rise eventually, because no matter what time frame we look at here, the average return will sit right at about 0%, because it's a zero-sum game, just like any other sector. Pretty interesting, I think.
Yeah. Especially if you're a long-term investor.
Totally. I mean, there's a lot of long-term investors who use metrics like that to help make a decision on when markets are finally looking overheated, and they can just park their money knowing that they're doing so at a much lesser risk than usual, when a lot of other people are buying near the top, they're buying near bottoms. And the best way to identify bottoms isn't just to look at a little swing like this and say, I guess it's time. You want to actually look at what the average trading returns are looking like, and whether it's near a pretty historical low, like it was here in January, right as the true bottom happened. So MVRV would tell us this wasn't really a bottom because it wasn't low enough, but here it got as low as this here, right? And that's a historic low. So that was more likely to be a true bottom, and that's exactly what happened. Same with here, and same with here. It's at least flattened out ever since it got to this point, and it's now just slightly underbought at the moment. So anyways, let's move on to whales really quick, as promised. Definitely some interesting stuff going on. I'll full screen this. I got to first put on some different tiers. We'll look at the 10 to 100 level, 100 to 1,000, 1,000 to 10,000, and then 10,000 to 100,000 Bitcoin addresses there in red. So one at a time, I'll just change the price to bars, make that a bit easier to understand. And now we've got a nice, easy to digest chart here. So beginning with the pink line, these are basically the sharks of Bitcoin holding anywhere between 10 to 100 BTC at this moment. So that's essentially 200K and above, 200K up to $2 million worth of Bitcoin. And it's showing us that they started accumulating pretty hard right at the beginning of June, before the big fall that happened the second week of June, which likely caught them off guard. They were starting to accumulate, and ever since June 2nd or so, it looks like they have added about 0.3% of the entire Bitcoin supply, or about 1.23% more to their own collective bags. So they've been accumulating pretty big, and they own total about 22.5% of the total supply of Bitcoin. So that's a pretty massive amount, and enough to really give them some pull when they do make accumulations and when they do dumps. Even more influential and probably the most reliable would be this yellow line, which is 100 to 1,000 Bitcoin addresses. And they began dumping way back in early October, just prior to the first all-time high in October. And we're already really taking profit by the second all-time high. They did try a little bit of accumulation here on the small bounce, but quickly kind of dumped again once they had a very small profit take opportunity. And really right here in the first month or two of 2022, that's when they really started to drop a lot of their holdings, with a little bit of zigzagging in between. But overall, I mean, we look at where they were 1 year ago, they held 21% of all of Bitcoin. Now they are down to 20.2. So about 0.8% of Bitcoin is no longer held by this tier. So you may be thinking, well, maybe they went up in value to 1,000 to 10,000, and that's why they were declining. Well, we can look at the blue line as well, 100, 1,000 to 10,000, which is also mostly owned by traders, but there are beginning to be a lot of exchange addresses by this point, which can make the data a bit noisy and hard to get good alpha on. But they were up to about 28.3% in late October, and they started taking profit right after this then all-time high. And we're taking profit seriously, even though the price went up one more time. Both the yellow and blue lines here were dumping pretty hard. And even though they tried to, get the bounce a little bit, they eventually gave up and dumped harder. And this would have been a point here in early January where you said, uh-oh, that's not a very good sign that the whales aren't holding on to their BTC right now. And you could start taking some profit yourself, especially if you were in way back in 2020 and this was still way above your initial entry point. But long story short, after a little bit of a roller coaster, they have dumped massively, and they're down to 26.35% after holding 27.6. So they dumped almost 1.5% of the Bitcoin supply onto other addresses. We can also see exchange. These are mostly going to be exchange addresses way up here, with maybe a few active human traders sprinkled in, with no real way for any of us to prove it, since the nature of crypto is there's a lot of anonymity involved, and they don't want people to know what their addresses are. So nevertheless, the red line has actually been shooting up a little bit since late January. And that makes sense because a lot of the active traders are dumping onto exchanges and getting rid of their BTC during this long slide. So really the two ones that I advise our community to keep a close eye on are 100 to 1,000 and 1,000 to 10,000, and just watch that combined line and see what's going on. And quite clearly, they, since owning just about half of the supply in late October, they've dumped pretty massively and are down to 46.5% now when you combine those two tiers. And we're waiting to see if we can get a nice climb from the whales, and that can really help spurn another bull run. But that's where we are right now.
So, Brian, from what you've just shown us, does that look like the whales have dumped onto the sharks?
Slightly. So again, this is the 10 to 100 tier. These are more like the sharks. We could even
Yeah.
include like the 1 to 10 Bitcoin if we wanted to.
Wow.
And you can
Yeah.
see that they've both been rising a little bit, especially the 1 to 10 Bitcoin addresses that
Yeah.
hold about just under 10% of the supply right now. They
Yeah.
really started right around February 1st, looking at this January dip as like the big dip that they could accumulate on. And
Mhm.
so far, they haven't been too successful. So the 10 to 100 tier, they were continuing to dump along with the whales. So I wouldn't say they were dumping onto the sharks. What they were really doing were dumping onto the really small addresses like these, the blue, orange, and
Mm.
these are all basically the, regular traders who have normal amounts of income and disposable money. And they
Yeah.
were accumulating hard right around here in late October because they got super excited about the then all-time high and bought in really hard after the initial retrace from the all-time high, and they got burned pretty considerably. Continuing to buy the dip, though, obviously they're owning
Yeah.
more and more of the supply, so eventually those who aren't capitulating right now will be rewarded, especially if the pink line finally starts to heat up.
That's interesting. I guess from another perspective, that's actually great for distribution. Just means that more and
Yeah,
more, yeah, people are getting more Bitcoin rather than just the whales having a high concentration with the
totally.
whales. Yeah, yeah. So that's it's not a bad thing, I guess. In a way, it's
Yeah, I mean, another way to look at distribution, we also have, um, we can look at the number of addresses instead of just the supply held. So I can go here. we'll look at uh, we'll look at just like the really high ones for a moment. So the largest addresses that really exist are the 100K to 1 million addresses here, and there are 5 of those in existence right now that have over 100K. Um, Going back to December, there were only 3. So, two more addresses that have that amount means, it's likely exchange addresses, almost certainly, but it's still good to see. And then the red line here, 10,000, 100,000, the amount has been going up pretty steadily since early February. That's good to see as well. The yellow line, huge increase. I'm not sure why. I do know that this was right when the Russia and Ukraine war happened. So who knows if that caused some interesting movement in the crypto space at this time. But it went from 2044 to 2180 pretty much overnight for an increase of 7% of addresses. So that's huge. And then we can see that the 100 to 1000 has been a little more modest, but it's been growing since early February as well. So absolutely, there are more addresses near the top than there used to be. And if we go down to like the smaller ones, starting with 10 to 100, we can see 1 to 10. Yeah, like this definitely shows that there's distribution because there are more and more of these addresses in existence. Not including the brown, I guess, because that includes 0. So that wouldn't show us really whether
Yep.
distribution is happening. But everything but that, I mean, the 0.001 to 0.01, 0.01 to 0.1 Bitcoin, all of these are just showing more and more addresses. It's very interesting to see, like, there are 10.62 million Bitcoin addresses holding between 0.001 and 0.01 Bitcoin. Some of you may have that. Um, I know friends of mine that own like really tiny amounts like that as well. Um, but it's cool to see that this number continues to rise over time.
Yeah, yeah, definitely is. It just means that there's greater adoption. There are more people dipping their toes into Bitcoin, and then getting to know it before they're comfortable, and then we'll see where that takes them.
Yeah, totally. And then I
That's
wanted to
fantastic.
show Ethereum as well, as I mentioned near the call, and then maybe we could start to wrap it up and talk about some
Sure.
final things that are going on in the markets. But for those Ethereum lovers out there, or just people interested in Ethereum, uh, if we look at the supply distribution and how that's been moving along, we get rid of that. Go to percentage. And we'll look at, we'll start with 100 to 1,000, which looks like it's been going up quite steadily since right around the war announcement in late February. The 1,000 to 10,000, however, had been going down for quite some time. Arguably, this might be the most impactful of the tiers for Ethereum. This is basically anyone holding, well, at that point, when Ethereum was near 4,000, they were basically holding around $4 million to $40 million, if I'm doing that math right.
Mhm.
So those were definitely whales, and they were dumping hard here until early June. And now they're showing a bit of a turnaround. So that's a good sign, holding 12% after being as low as 11.8. So not a massive jump, but this visually at least shows us that there has been a little bit of a solace to the dumping that had been going on for that long stretch in late 2021 and the first half of 2022. And then
Yeah.
going above that, these are basically the top tier of still a decent amount of active traders. And it looks pretty similar to the pink line. They arguably started accumulating a bit earlier, where they were at their lowest in mid-March, and they started accumulating at this local bottom. Many of them got up to here and then dumped again, which is interesting, but many just accumulated right back on this small drop. And then finally, after a lot of inflation news came out, especially that big early May drop, a lot of them were getting out right before the big dump happened and then started accumulating right before the latest dump happened in mid June and have been accumulating ever since alongside the pink line. So, short term wise, it looks like the whales are optimistic. Long term, it still looks like they have a lot of room to make up in terms of what they used to be holding, especially way back here a year ago. So that's
Interesting.
Ethereum for you. Mm-hmm.
That's great. Oh, fantastic. Nice. Well, thanks for thanks for sharing that, Brian. So, do you have anything else that
Absolutely.
you'd like to share, or
Yeah, I
would
mean,
you like?
I was also just going to mention whale transactions can also be a nice supplementary metric if you're looking at whales, because we can see how many $100,000 plus transactions are happening during any given time frame. Right now, it's relatively low for Ethereum, and really quickly we can check it out for Bitcoin. There we go. So yeah, it's about the same. Pretty much a slow decline, but look for a spike like this, especially if it isn't just happening due to a huge drop. Anytime you see a huge drop, you'll see whale transaction spikes just because of the premise of buying low. They're going to lock in a little bit and make some bigger movements, and volatility is going to cause a lot of polarization. But if you start seeing a big spike like this when there's sideways movement like now, that would be a very good sign that either a big accumulation is happening, which is most of the time, or occasionally a big dump is happening. So you can compare this to what's happening on the supply distribution and get a lot of really good insights. So, for example, there was a big dump in supply distribution during those big whale transaction spikes. So that could have helped give some information there. But yeah, that's about
Cool.
it. Any other things you wanted to briefly go over?
No, I'm pretty happy with what you've shared. I think in summary, as I guess you showed that there was a lot of chatter going on social media for CPI and inflation, right? So everyone's very aware of those things right now, and then
Totally.
from there, yeah, and then you showed that the correlation, right, between Yeah, and a lot of it was happening on Reddit and Twitter. And so no, I think you've really shown some really cool insights on on what's happening in the market. It seems like a lot of the, obviously the whales are making some pretty large movements, causing the market to, either go up or go down. And it's interesting, I guess, in the last few months, what's also happened is a lot of the Bitcoin miners who had a policy of just keeping the Bitcoin were forced to actually sell some of the, their Bitcoin holdings in order to keep the lights on.
Right.
So that may have been a cause of some of that large whale movement as well.
Yeah, that's definitely good theory. I think that many of those miners do qualify as whales, and um, it's they have interesting decisions to make because there's certain times where it's not profitable to mine because it's more energy to make their miners run than it is to mine an asset that's on a serious decline. So that can always play a factor for sure.
Yeah, yeah. So that's I mean, interesting times ahead, definitely. I guess, and in closing, I guess it's important to get the public, more and more people educated on 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 Bitcoin and on crypto, and what it does, and definitely, any crypto investors who are trying to educate themselves. This is a fantastic tool to gain more insights into what's actually happening on chain, because it's definitely more transparent than what the stock market is. You can definitely see a
Yeah,
lot of things happening. Yeah, yeah,
it's true. That is one of the advantages. There's some even argue that it's leading the stock market, and many um, bullish and bearish divergences that happen in crypto end up playing out on the S&P 500 the same, especially right now. So it's
yeah,
it's very valuable no matter what kind of trader you are.
yeah. Definitely, definitely. Hey, Brian, thank you so much for your time and for
Thank
joining us
you.
this month. Yeah, looking forward to the next catch up.
Yeah, I'm very much excited to go over hopefully a more optimistic market outlook the next time around. Not that this was particularly bearish, but we're all hoping that things can heat up as we get into the latter half of the summer here.
Yeah, definitely, definitely. Hey, just curious, how are things in the US, like, prices and inflation? Like, do you actually, like, do you guys feel it on the ground?
Oh yeah, yeah. I mean, so I live in Los Angeles, and we're kind of us in New York are kind of the epicenter of inflation right now, and our gas prices normally were sitting, I don't know, between $3.50 and 4.50 over the past 5 years. And all of a sudden, we're seeing $7 gas prices, just to give you some
Oh,
perspective. Um,
wow.
little things like just getting a gallon of milk, 50 cents higher, all sorts of things that we're seeing right now, even like going out to eat, getting a brunch, it's, uh, it's noticeably higher by a couple bucks. So inflation is definitely real and not just something that we're hearing about in the news.
Yeah, yeah. It's I mean, definitely here as well. The price of for example, the price of chicken has gone up maybe 40% here.
40%. Wow.
Yeah, and that's after the government's put a cap on the price of chicken on the chicken farmers. But yeah, it's gone up about 40%. We're lucky with fuel that the 95 has been capped. We're paying oof, probably 50 cents US per liter. So that's extremely, like, it's extremely subsidized, right?
Hmm.
Very very much subsidized. But yeah, we're definitely feeling it here as well on the ground. But probably not as much as other parts of the world.
Yeah.
Yeah.
Yeah, I'm glad that you guys are in a relative bubble compared to the rest of the world, and hopefully we can all just get back to normalcy eventually, because then our investments and anything, whether you're in equities or crypto or anything else you guys are in, you'll start to see some good good price directions again. I'm confident
Definitely,
it'll
definitely.
happen eventually.
Yeah, yeah, definitely looking forward to that. And if anyone's cashed up right now, I guess you know, uh, yeah, yeah, it's a good time to kind of look around and see what's on offer.
Yeah, I mean, it's everything's on a discount, if you will. You never know when the bottom is in, right? It's difficult to
Right.
just catch a falling knife, as they say. But
Yeah.
I don't give investment advice. All I can say is the price of Bitcoin is about 65% lower than the all time high, and that's a lot. And even if things go lower, you can at least say you bought at a better time than many people did in October, November. So
Yeah, 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 definitely, definitely. Yeah, definitely no financial advice being dished out here. Just yeah. All right, well, Brian, I won't hold you back from your dinner.
yeah, it's dinner time for me, but I'm looking forward to touching base soon. I'll share this video with our community as well, and hopefully we see some of your community members trickle over and come say hi. I'm in Discord all the time and here to help on the metrics. And we'll talk to you next month, Andy.
Definitely. Thank you, Brian, and thank you guys for tuning in. Have a great one.
All right, my friend. Take care. Bye,
All right.
guys.
Take care. Bye-bye.